Welcome back to our channel, where we explore important economic topics. Today, we'll be diving into a crucial issue that affects not just the United States but the entire world, the US debt crisis and its impact on the global economy. Let's jump right in. Before we discuss the current debt crisis, let's understand what it means. The US debt crisis refers to the accumulation of the US national debt, which is the total amount of money the US government owes to its creditors, both domestic and foreign. As of our knowledge cutoff in September 2021, the US national debt stood at around $28 trillion. However, please note that the numbers may have changed since then, so make sure to check the latest figures. The US debt crisis has several causes, including factors such as government spending, tax policies, healthcare costs, and interest payments on previous borrowings. The significant increase in debt levels over the years has raised concerns about its impact on the global economy. One of the primary concerns is the debt to GDP ratio. This ratio compares the size of the debt to the overall economic output of a country. Currently, the US debt to GDP ratio is over 100%, which means the debt is larger than the annual economic output of the United States. Such a high debt to GDP ratio has consequences. It can lead to reduced confidence in the US economy, potential credit rating downgrades, and increased borrowing costs for the government. These factors can trigger a chain reaction that affects the global economy. The US economy is the largest in the world, and any disruptions have a ripple effect worldwide. Here are some ways the US debt crisis can impact the global economy. Financial markets volatility. Uncertainty regarding the US debt situation can create market turbulence, affecting stocks, bonds, and currencies globally. Interest rates. If investors perceive US debt as risky, they may demand higher interest rates on US government bonds. This increase in borrowing costs can spill over to other countries, making it more expensive for them to borrow as well. Global trade. A debt crisis can lead to a decrease in consumer spending and a slowdown in the US economy. This reduction in demand can impact other nations' exports, affecting trade relationships and economic growth worldwide. Investor confidence. A loss of confidence in the US economy can prompt international investors to shift their investments elsewhere, potentially impacting capital flows and investments in emerging markets. International monetary system. The US dollar serves as the global reserve currency. A debt crisis could weaken the dollar's status, leading to uncertainties and potential shifts in the international monetary system. These are just a few examples of the potential impact a US debt crisis can have on the global economy. It's important to note that managing the debt crisis requires a multifaceted approach, involving fiscal responsibility, economic growth, and structural reforms. To address the debt crisis, policymakers may need to make difficult decisions, such as implementing spending cuts, increasing taxes, or reforming entitlement programs. Balancing these actions with long-term economic growth becomes critical to ensuring stability. That wraps up our discussion on the US debt crisis and its impact on the global economy. The US debt situation is a complex issue with far-reaching implications.